Welcome back. Purple Group has delivered a strong interim performance illuminated by robust revenue growth and improved client engagement, which showcased the group's ability to remain resilient in an unpredictable macro environment. Group CEO Charles Savage joins us now for greater perspective. Thank you so much for your time, Charles. Let's start off with that double-digit top-line growth. What did it take to achieve that?
Look, I think anybody who's been watching the group over the last three reporting periods would have predicted this, this headline growth. We've been stacking up good sets of results over the last three reporting periods, and this is just, continuation of the momentum that we've set in those periods.
And just talk to me also about the strategic pillars that really have ensured this momentum of growth.
Look, a key, focus on our key value drivers, acquiring customers, getting them active on the platform, getting them to onboard their assets onto the platform, and then ensuring that, that they're active and engaged on the platform so they get educated and they understand what they're doing.
Yeah.
And, that's what we've been doing for a decade now, and just being super laser focused on those core value drivers, and they're delivering in the result.
And actually, what are you seeing in the composition between your activity-based revenue and non-activity-based revenue growth?
Yeah, so it's almost 50-50 with improvement across both metrics. Non-activity is traditionally called annuity revenue, so it's bankable revenue that we get regardless of the market conditions.
Yeah.
The activity-based revenue is transactional, and so it's dependent on what people do, and it's largely driven by market activity like volatility. So, for us, we focus on driving both with a little bit of a bias towards annuity-based revenue because it's more dependable and more bankable.
All right. I hear you on this, and there is indeed a lot of uncertainty in the macroeconomic environment. You spoke earlier on about the efforts that you do make to onboard clients and also just to get them to be active. Are there any shifts between your specific groups of investors, between your retail investor base and institutional investor base growth?
Yeah, I mean, the business was founded on delivering value to all South Africans. In the result, at the end of an institutional client is just another retail investor. And so our business is capable of serving institutional investors. And we focused heavily over the last 3 or 4 years on building an institutional base through pension funds and retirement wrappers. But at the same time, stay focused on our retail opportunity where we've got 1 million customers and at least another 6 or 7 million South Africans to go and get and onboard and get invested.
Yeah, and I mean, there was a rise in your active client base and value of client assets. Does the current macroeconomic environment, the geopolitical situation and market turbulence not threaten that, at least in the short term?
Look, the biggest driver of customer deposits are interest rates. So, I think the future still holds reduced interest rates. So I think that's going to be supportive for our growth as interest rates decline, people's propensity to deposit goes up, so they accumulate assets faster. And then, the global economic, conditions around trade and Trump are, obviously creates a whole lot of uncertainty. In the short term, that uncertainty means there's volatility and opportunity, and that's good for our business. But that uncertainty needs to go away in the medium term. Otherwise, investors withdraw their confidence, and that way they stop investing. Having said that, though, we've got fixed income products, money market funds on the platform. So it's not just about investing in shares. We've got every asset class for every market opportunity.
All right. And indeed, people at this point should find safety in diversification. And I did see, of course, that huge surge in your bottom line. We are seeing that revenue growth, and really what you want is for as much of that revenue growth to flow through to the bottom line. Are your costs at an ideal level for that to happen and to continue for that revenue growth to filter through to the bottom line?
Yeah, I think that's the most important point of our results is, I said in my CEO letter that for every 100 Rand of revenue, 70 Rand flows through to profitability. We've been working really hard over the last decade to get that right. We've got it right. We've been improving the whole time. So again, it shouldn't be a surprise to investors. but it is exactly the right mix now. It gives us the ability to drive revenue to the bottom line and support and give a return to our shareholders, while also giving us an opportunity to reinvest capital in our customers and growth.
Yeah, and talk to me, because I mean we're looking at digital platforms here. Just talk to me about your innovation drive and really the kind of investments that you are making into that to ensure efficiency and of course an ease to when your customers interact with your platforms.
Look, I think over the last decade, it was all about fractional shares, platforms that are accessible, no minimums, etc. I think the next decade is going to be defined by how we leverage AI to make things simpler for our customers, give them back time, to help them do complex tasks with ease. And so a lot of the innovation I predict over the next 10 years is going to come from humans partnering AI to generate better investment outcomes.
And does that also come with increased investment in marketing and education to increase customer awareness?
Yeah, look, we spend a significant amount of our capital on education and marketing. That's not going to stop. Our education initiatives are countrywide. We go to schools, universities, and we've got our own online educational platform. So a lot of time and effort spent on educating South Africans about investing. The good news is investing is not a complex topic. It's a very basic topic. Warren Buffett started when he was 11. Wow. And so the whole of South Africa has the same opportunities, but with more access today, thanks to the internet.
And of course, the key is expansion as well. So lay the table for us on the pillars of focus for your expansion drive in the short to medium term.
Yeah, three focus areas or pillars on which we want to build the business. The first is there's 6 or 7 million South African taxpayers that are not customers of ours that we need to go and get. So we've got lots of growth just by getting new customers. Secondly, is we want to broaden our product set so we can serve more of our customers at different times in their financial journey, and attach ourselves to more of their financial wallet, and in doing so increasing ARPU. And then finally, we've built an incredible South African platform that is relevant internationally, and we want to test our capabilities in international markets. We will enter Kenya in the next 6 months. Okay. We've just been licensed in partnership with a broker there, and we've been working hard at getting live in the Philippines. And whilst we don't have any green lights to go live, we're still in market, and at some point we will be able to go live in that region.
All right. Well, thank you so much for your time and giving us insights and more detail on those numbers that came out from Purple Group this morning. That was Purple Group CEO Charles Savage.